Once again, this be the realest shit you heard in your life.
Hello, everyone. This is Kris Diaz, and this is the Real Est Show you know. And I know I say it at every episode, but today we really have a special guest. We have Micah Smith from Micah Abigail LLC, and she's going to talk to us about credit and how it affects the home buying journey. So, Micah, how are you?
Amazing.
Good. Long
so
time no
see
see. I know. So I've known Micah for quite some time, but it's been a while since we caught up. So I'm really glad that you're here.
Thank you for having me.
Yeah.
It was truly exciting when I saw your name pop up on my phone, because I've had you saved in my phone for 10 years.
Oh,
cool. And I was like, hey, blast from the past.
Yeah.
And lo and behold, here we sit.
Good. So tell us a little bit about Micah Abigail LLC and a little bit about your company and what you do.
Absolutely. So Micah Abigail, it started about 4 years ago on paper. And so I started building it 5 years ago.
Okay.
And my first year of building my firm was I did pro bono. I did all pro bono work because I wanted to make sure that whatever product I was bringing to market was as good as it could possibly be. Like, I didn't want to be one of those companies that tested it on their clients that were paying me. I'm like, that's not right.
Yeah.
I wanted to have an amazing product. So very long story short, I do credit restoration. And my niche is the mortgage industry. I help people when their credit is not where it should be, and where it should be is in the premium tiers. Because if it's not in premium tiers, you're simply overspending for literally everything you own.
Yes.
And it is my passion. It's my vocation. I've been teaching all over the country for the last 12 years. And when I built my company, I'm not your typical entrepreneur who is like, I want to just be my own boss. Like, that's not me. I already was my own boss.
Yes.
It was just, I'm like, I have an idea and I really want to put my own stamp on something. I have something that I want to bring to market and I want to bring a product that isn't about profit. I wanted to finally build something where it was people over profit and where the customer always wins. And then I wanted to build something where my internal team, I wanted them to know that they mattered, because I know what it's like to work in a company and be a number. I know what it's like to be a customer and to be thought of as a number. And I wanted to create something different. And the only way that that happens is if it starts at the top. And so I knew I had to build something. So I had this pull and I was like, oh my God, how am I going to do this? I'm like, I don't know anything about opening a company in New York. And here we are.
Cool. Well, I mean, you and I are very much alike, and that's why I joined the mortgage broker world.
Yeah.
After working in the banking industry for over 20 years, it's, I want to put people over profit.
Right.
I want to work for my clients, and I really care about, helping them find their dream home and financing their dream home, as opposed to, hey, how am I going to make as much money as I possibly can for the bank and their shareholders?
Exactly.
Exactly. So that's great.
It's a completely different mindset.
So why credit? I mean, besides helping people, there's many ways you can help people.
Absolutely.
What made you get started in the credit industry?
So what's really interesting is I was pulled into this. I was recruited into this industry. I didn't know that my industry existed. And so I worked for a big firm for a long time. And so they recruited me, and I was actually working in lending when they recruited me. And I'm like, why would you ever want me? I'm like, I don't have the best credit score. I don't know why. I certainly couldn't fix it. I said, I didn't study finance. And to me, it seemed so left field. And so very long story short, when I got into the business, I realized very quickly, Kris, probably within the first month, that this was not a job. This was not a career. This was a vocation.
Got it.
And for me, what has kept me in this business as long as it has is one of my favorite things to say is that you're most qualified to help the person that you used to be. And I struggled so much with credit and finances. I was telling your team earlier, I'm like, I come from very humble beginnings. I didn't know how to manage money. I didn't know how to manage credit. I knew that someday I was going to be wildly successful, and I didn't know how. And so not knowing, so being this person here, not knowing, not understanding, having to go through life and go through things the hard way, and being on the opposite end and having learned everything, but learned it so well that now I can teach it. Now, again, I've qualified myself to help the people that I used to be. And so whoever is receptive to it obviously will benefit from it. And so credit, I didn't choose credit, it chose me.
Ah, cool.
Yeah.
So, what is credit repair and credit counseling? Is there a difference between the two?
There
And if
is.
so, what is it?
There is, and it drives me wildly crazy.
Okay.
So, credit repair is so when I talk to people like yourself in the mortgage industry and I'm talking about our services, I'm like, listen, everything we do is in an effort to preserve and restore the credit score
hmm
because the credit score itself, right, on a piece of paper, how you look on a piece of paper and that number that is portrayed really is telling people how likely or unlikely you are to default. And so we're
hmm
teaching people how to maximize that number. And so again, everything we do is going to be guided towards that. And so we might give different advice than even say a lender, because a lender's job is to get you through underwriting, where our job is to actually maximize the credit scores.
I'm sorry
Mm-hmm.
to interrupt, but that
Mm-hmm.
makes a difference,
Mm-hmm.
right?
Yep.
So, most folks think, FHA, minimum FICO, 580,
Yeah.
conventional 620.
Mm-hmm.
And yeah, that might get you through underwriting,
Mm-hmm.
but it's not going to get you the best rate or the
Right.
best pricing,
Right.
on the financing of your home.
Exactly. And that's why I
Yeah.
love working with people like you, because you actually care.
Yeah,
And that's
of
what I look
course.
for, and that's the most important thing. And to capitalize on your question, credit counseling. So unfortunately, we see this every single day. And people right now, so we are in $1 trillion debt right now, our
Mhm.
credit cards. So people are in a place right now where they are in more debt than they've ever been
hmm
from a credit card standpoint. And so a lot of people just being so overwhelmed with debt, they reach out to these credit counseling services and thinking that this is a way out and that this is going to be something that's going to help them long term. But what they don't realize is this. So credit counseling is going to tell you stop paying your bills.
hmm
So in my world, the moment you stop paying your credit cards, your car loans, your mortgages, right? Obviously that's complete and utter catastrophe to your credit report.
Sure.
And so you plummet to this horrific number and the damage is lasting. And so what this company will do is they take the money, they put it into an escrow account. And so usually you're going to find that there's a contract of some sort. And it's usually like a 4-year, 5-year contract where they're like, listen, over this amount of time, we'll be able to settle all your debts for you. But
Mhm.
there's a lot of little things that are left out. And this is what people come to us and they're like 2 years into something and they're like, my credit score is worse than it's ever been.
Yeah.
Nothing has been settled. I've been served multiple times by the sheriff. I'm
Mhm.
getting sued. Now my wages are being garnished. They're like, I don't understand what's happening. And I'm still paying this company $700 a month. And it's just that they were misled
Mhm.
to believe something that it's not. And so we like to tell people, I always tell people, please do me the favor of empowering yourself by doing a little more research before you sign on a dotted line,
Mhm.
because people just don't know what they're signing. Like if you want to fall into something, fall forward. Do just a little bit of research because we have copious amounts of, let's say, ChatGPT. Just do some research.
Yeah.
Just say, what is the difference between credit counseling versus credit repair? And it will outline for you, or listen to this podcast and it will outline
Yeah.
the differences for you. But we have to take our own measure and we have to educate ourselves because no one's going to do it for us. No one's going to protect us for us.
Mhm.
We have to protect ourselves.
I know some folks who have gone through divorce
Yeah.
have gotten that same advice from their attorneys. It's like,
Yeah.
stop paying everything.
Yeah.
And it's like, okay, but it's going to take a long time to recover.
Yeah.
Once
Yeah.
you stop paying, and
Yeah.
that's like total destruction of your credit.
Yes. Yeah.
So
You always have to, I think something my husband and I always talk about, and something I talk about with even one of my mentors, is you always have to consider the source.
mhm.
Who is giving you advice and what is their motive?
Yeah.
Always consider the source. Always. Ask yourself that question. What is their motive?
Yeah. And it the motive might not be coming from a bad place,
Not at all.
right?
No.
But it might be, here's how we fix this small problem,
Mhm.
but, it's going to take a long, long time to recover afterwards.
Yes.
Exactly.
Exactly.
And, is that really the best advice?
Yeah.
So what are some of the common misconceptions people have about credit repair?
So I think there's quite a few.
Mhm.
And so I think some of the biggest misconceptions that I see, so a lot of people think that when they're in credit repair, they're all of a sudden protected from having anything negative ever hit their credit,
Mhm.
or that they no longer have to manage things and that it's being managed for them.
Yeah.
And so we see people all the time who, throughout our program, they'll acquire new late payments, or they'll get new collections,
Yeah.
or something will happen, or they'll max out their credit cards.
It's all right. Micah, fix it for us.
I've had people say
yeah,
that.
Yeah,
They're
It's
I
like,
can
I
just
don't have
stop
to
paying
worry
my
about
bills.
my,
And I literally,
my
like,
budget, my
stomach-
financing
Yeah.
anymore.
Yeah.
Micah will fix it.
Yeah.
So,
Like my stomach churns when that happens. And I think the other thing is too, is that, just because I'm in credit repair, all these things are automatically going to get deleted and super quickly.
mhm.
And not knowing the magnitude of work that goes on behind the scenes to try to get things removed, and what it comes down to is laws. It's not magic. I think people think that I'm able to just erase something from your credit report, and it's not me removing it. It's the bureaus, it's the
Mhm.
creditors. We've got to build these investigations and tailor them around the laws. And so I think there's a misconception. It's like, because I'm in your program, I'm automatically going to get fixed and it's going to be quick. I mean, we've had people 1 weekend, they're like, why am I not fixed?
Yeah.
I'm like, 1 week? I'm like, it took you 6 years to do what you did. I'm like, what do you mean,
Yeah.
1 week? I'm like,
Oh, so next month, I'll have a 800 credit score, right?
absolutely.
So-
I mean, we get this all the time.
Mhm.
And I think that also just in credit in general, people have a misconception because it's not common sense, our world. And if you really
Yeah.
think about it, it does defy all logic, right? Because let's say you have a collection on your credit report and it's a little older and you pay it. All you do is restart the clock, you'll drop the credit score, which is very bizarre, right? Because you assume you're paying your debts.
Mhm.
It would actually drive the scores up, but it actually drives the scores backwards because of the way the algorithms work in the credit industry. And so many people have these misconceptions. I'm just going to do it myself and I'm just going to pay everything off. And we're like, no,
Yeah.
don't do
Yeah.
that. Like, you need a specialist
Yes.
to help you with this stuff. Yeah.
So how long would it typically take
Yeah.
before you do see results from credit repair?
Sure. Everybody is super different.
Yeah, of course.
Yes.
Of course.
So-
Just talking in generalizations.
Yeah.
So.
I mean, most people, depending on the complexity of their file, you can see results in as little as 30 days.
Mhm.
So some people, you'll see a jump in 30 days. Some people, most of our clients generally need, like, to see solid results, need about 6 to 12 months. But comparatively speaking to our quote unquote competition, where they're about 3.5 years, I mean, that's a substantially shorter time frame. We're extremely aggressive and we tailor things differently. Like, our goal is to make people really happy, and we
Mhm.
want to get them in our program and out of our program as quickly as possible. Well, one, I'm servicing people like yourself. Like, I get all of my business from people like yourself. So if I'm not making my affiliates happy and their clients happy, we're not going to get any more business.
Yeah.
So we're very aggressive, but literally sometimes as little as 30 days, sometimes even a little bit less. I think the
Oh.
shortest time frame I've ever seen is like 2 weeks.
Okay.
Mm-hmm. You
Okay.
can really see
So
some
you can't
substantial
pull off
change.
miracles. So-
I mean, there's been a few, yes.
Okay.
There's been a few. We've had 400s turn into 700s in 30 days.
Wow.
Yeah.
Okay.
Yeah.
So I have a personal question.
Sure.
So Bill Pulte, who is now in charge of the GSEs, was placed in charge by the current administration, recently mentioned that, Fannie is going to start taking a look at your Vantage score.
Oh, yeah.
What is the difference between Vantage and FICO? Is there an advantage by saying now, we could look at your Vantage score as opposed to your FICO? Educate me. Like, I don't
Great
know.
question. Yes. So the newer algorithms that are being adopted by the mortgage industry. So some companies have adopted them, some companies have not. But the thought process behind it. So when I heard FICO speak about this was something that I really was curious about. So their whole thought process behind the new algorithms they're saying the mortgage industry is very antiquated, right?
Mhm.
So they're saying that the older algorithms are very antiquated. And what they're simply saying about these newer algorithms is they're saying it's actually it's built to be able to weed out people who are technically more risky, yet by pushing more people through. So it's supposed to be more lenient in areas where it's supposed to be more lenient, and it's
Mhm.
supposed to be better at actually helping the banks mitigate their risk. So for instance, I'll give you for instance. So someone maybe who has been perfect their entire life,
Mhm.
right? So they might have had a slip up. And I can give you, for instance, like I had a guy who is a big investor
Mhm.
and he's never missed a payment in his entire life, ever. And he pays someone to pay his bills. He had like 19 mortgages from the same company. The person he pays to pay his bills missed a payment on the mortgage,
Mhm.
took his credit score from the perfect 800 and something that he had built his entire life to this number that was completely unsatisfactory for him because as an investor, he knows the importance of credit scores.
Yeah.
And so, right, he reaches out and he's like, can you remove this? Or like, absolutely not. Right. So we go in, we're able to fix this. But someone like that who is penalized so heavily, right? These new algorithms are supposed to look at that more so on like the greater scope. So it also is going to have what's called trended credit data.
Uh-huh.
So trended credit data is they're looking at the trend over the last couple of years. So the newer algorithms are built to actually look more at the bigger picture. So they're saying that people who are more inherently risky are less likely to get approved, right? So like all of a sudden, if you decide to make a couple of good moves in your life for the last couple of months, an underwriter can look at your last 2 years and be like, disapproved or not approved versus someone who is notoriously just good at managing their finances and you can see it on paper, they're going to get pushed through. So that's what they're saying those new algorithms are built to do.
Mhm. Got it.
Mm-hmm.
Yeah, I mean, I had folks ask me, and I'm like, let's wait and see.
Sure.
Let's see
Yeah.
how it affects. But I wasn't sure of the difference myself.
Yeah.
So I'm glad I got to ask.
So basically,
ask an expert.
to sum it up, right?
Yeah.
If you're good, you're going to be better.
Mm-hmm.
So if your credit is good, it's going to be better. If your credit is bad, it's going to be worse.
Got it.
That's basically it.
Okay. Cool. When I'm working with clients and I'm working on mortgage pre-approvals, I get asked this all the time, right?
Uh-oh.
They're like, can you not, is this going to affect my credit? Is this going to affect my credit? And I'm like, it might. If I do a hard inquiry, it might affect your credit. But I'm like, you've built up your credit for this very purpose, right?
Mm-hmm.
For most people, buying a home or, a property, it's the largest financial transaction of their lives for many people. And I'm like, this is the whole reason you built up your credit. And yes, I have to do a hard inquiry. So as a result, I started doing soft inquiries for folks, and I'm like, that's fine. But when you do find that home, I have to do a hard inquiry, through the 3 credit bureaus, and I have to send them a tri-merge to the lender, to the bank. And then I have to do a hard inquiry. At least a soft inquiry will give me a general idea, right? But can you explain to the audience the difference between a hard inquiry and a soft inquiry? And how much does a hard inquiry affect their credit?
I would love to answer this.
Cool.
So soft pulls versus hard pulls. So with soft pull, there is 0 impact.
Okay,
and they are accurate. So I always tell people when you go to your lender and they do a soft pull, this is a question a lot of my lenders have. When my lender does a soft pull or when I do a soft pull, Micah, is it the same information I would pull when it's hard? And I'm like, absolutely. It's 100% the same. It's the same algorithms. So essentially, it's just one is impacting the score, one is not. And so the hard pull, so when it's like it's time to buy, the hard pull is minimal. It's a very minimal impact. So you're looking at a measly 2 to 5 points. That's usually, the general hit. But the beautiful thing about the mortgage industry too is that there's a shopping window.
Yeah.
And so that shopping window is great. So let's just say that your client makes a mistake of going, from bank to bank to bank until they find you, then you, right? When you pull it, your hard pull, it's not going to hurt them again. They have a full 45 days.
Yeah.
Right.
It counts. from my understanding, only counts as one pull, right?
One pull.
Yeah.
One pull. And you have 45 days with the older algorithms. The newer ones, you have 14. So
Okay.
the older algorithms, which like 90% of lenders are using,
hmm
right? It's 45 days. So you can go from lender to lender. And it's most impactful for the first 6 months. After that, it drops about a point. And then after 1 year, it stops calculating into your scores completely. It's so minimal,
Yeah.
but people are terrified of hard pulls.
They are.
Terrified.
Yeah.
Mhm.
And, my point to them was, well, previously, I'm like, I had to do a hard inquiry to run it through AUS, which is the automated underwriting system,
Mhm.
right?
Mhm.
DULP, for me to run it and see if we get that stamp of approval from Freddie or Fannie
Yeah.
saying, yes, this mortgage will go through.
hmm
But now we can do a soft pull, do a
Yes.
tri-merge soft pull and run it through AUS.
hmm
So, I'm more than happy to do a soft pull,
Yeah.
but, I'm like, it doesn't affect it that much. And I'm like, yes, it's necessary.
Yes.
Like, but now I do soft inquiries for
Okay.
folks,
Okay.
so cool.
It is funny how much stress it alleviates for people knowing their credit pull is soft.
Yeah.
It is really interesting, right? Like just
Yeah.
the mentality, like the thought process behind it.
You know what it is I don't want to say they're misinformed,
Right.
but there is a lot of misinformation floating out there,
Yeah.
right? So you might hear from a good family member or friend and be like, no, don't do a hard inquiry. Don't do a hard inquiry. It's going to impact your credit
Right.
score, and that gets stuck in their head and
Of
they don't want to
course.
hear anything
Yeah.
else. But now we have a credit expert telling them that, yes, a hard
Yes.
inquiry is not going to kill your credit score.
Yeah.
Plus, when you work with, myself being a mortgage broker, I'm like, I pulled your credit once.
Mhm.
It's good for 3 months.
Mhm.
And yeah, it's not like you're going bank to bank to bank to bank. Any of the 100+ lenders that I work with will accept that credit report as
Mhm.
long as it's within 3 months,
Yeah.
So,
Yeah.
it's not like you're going to XYZ bank and ABC bank and, they're going to run your credit and they're going to run your credit. I do it once and that's it.
Mm-hmm.
So, cool.
Listen, that's why we exist, is to back you up. That's all I can say. It really is, because you're not the bad guy. And people have this misconception, that the lender is responsible for dropping the credit. And I just have to confirm, you're not the bad guy.
Yeah.
It's
And-
not you.
And you know what's, I've had clients tell me, well, my credit score is this.
Of course.
Here's my credit score. You don't
Of
have to
course.
run my credit. I'm giving
Right.
you my credit score. I'm
Right.
like, Credit Karma's not that accurate.
No.
Credit Karma is the bane of my existence. Damn it.
Yeah,
It's
sure.
like, it's not accurate.
Yeah.
And, I'm picking on them, but there's plenty of
Yeah.
other, credit reporting type,
Yeah.
of companies out there that supposedly track their credit.
Mm-hmm.
How often should someone check their credit report?
Depends on how neurotic you are.
Okay.
I mean, I look at mine every day.
Uh-huh.
I really do, because Credit Karma, which I know you dislike, and I can share with people why Credit Karma is helpful and
Uh-huh.
what it shouldn't be used for. But Credit Karma, it updates every single day. So it monitors 2 bureaus, right? It uses Vantage 3.0, consumer scoring model, right? It's going to be very inflated compared to what a lender pulls. It's all it comes down to, guys. It's a different algorithm. Okay? Everyone who's listening, it's a different algorithm.
Yeah.
And anyone who pulls your credit, right, that's your score with them and them alone. So when your lender pulls it, that's your score with them. When you go to your bank, that's your score with them. Go to Credit Karma, that's your score with them. You have to know, like,
Yeah.
each individual pull is separate.
Yeah.
Yeah.
But I always did find it super overinflated.
It's super inflated.
Yeah.
On average, 40 to 60 points higher than yours. On
Yeah.
average. The worst discrepancy I ever saw was 200 points. Yeah.
Yeah.
And that was a bad day.
Yeah. And they're like, Credit Karma tells me,
Oh,
what?
yeah. Yeah.
Credit Karma told me my
Yeah.
score is 800.
Yeah, of course.
Not
No,
quite.
Not really.
Not quite.
But I really do, to capitalize on what you said. So I like checking my stuff every single day, because I know the importance of it. And again, it's a quick, just glance. Everything's cool. Everything's where it should be, just because 1 in 3 people will face identity theft in their lifetime.
Mhm.
And so, like, I'm alerted anytime, like, there's a new inquiry or if there's something that's going on, I'm always alerted. So it's always good to stay on track, right? You can't track what you can't measure. And so I think it's really important. I think the worst mistake that we make is going to someone like you and saying, I want a loan, but not really knowing where you stand. You should know where you stand because it's going to impact your wallet.
Yeah.
If you aren't prepared with your credit, it's going to impact how much house you can afford. And so we tell people you need to be on point with this stuff and do your research, work with a specialist, check your credit report, look for negatives, look for things that need to be worked on. Because if you don't, going to a lender ill-prepared, it's not going to serve you very well.
Yeah. Are there any credit monitoring services that you would recommend?
I think honestly, I think the free ones are great.
Okay.
I'm all about, so Credit Karma will monitor too, right? Again, guys, it's not your mortgage scores. Don't look at these for the scores. But again, I like it because they do update you every single day. And then Experian.com, just get the free one. And so that way you have access to all 3 credit bureaus. And again, they update every single day, which is really, really nice. But don't ever rely on either of these applications for the correct credit scores. Because again, they're using different algorithms than what you use. Even Experian uses FICO 8, right? Which is very different than yours. So you just want to use it to just make sure that things are like, it's going to show you a snapshot in real time, just making sure that things are where they should be to a degree.
Okay. And you mentioned before paying off debt. Does paying off debt impact a credit score? Meaning, well, short-term debt versus long-term debt. You know, is it better to pay revolving debt? Is it better to pay off installment loans? What advice would you give out?
Great question. You know what's so funny is that so many of my lenders, I love going through this with them because we get to talk really nitty gritty. And so lenders oftentimes use a simulator and simulators are wrong. And so one of my lenders was like, my simulator just told me to pay $100,000 towards a student loan and I'm going to get 100 points. He's like, is that correct? And I was like, no, like, don't you dare have your client pay 100 grand towards their student loan. No.
So that's good to know because I don't like to give credit advice. So I try not to use the credits, simulator. I'm like, go speak to Micah.
Yes.
Right? Like,
we can help a lot more.
I'm not the one, I'm not the expert. Like I know what I know and I'm not an expert when it comes to credit repair. So I don't like to use the simulator myself. So that's good to know.
It can be dangerous. It can be super dangerous. But if you're really looking to move the needle, we'll tell you where to apply those funds.
Okay.
So sometimes there might be something negative that I need to pay off to move the needle. Sometimes you're going to be paying off credit cards. It just depends on what you have on your credit report. And that's why everything we do is customized because you truly have a fingerprint when it comes to your credit. It's your financial fingerprint is really what it is. And so we're giving advice uniquely to your situation that fits your situation, again, to move the needle upwards. Everything we do, people are like, what's your success rate? I'm like, it's 100%. I'm like, if you just do what I tell you to do, your scores will go up. I can't tell you how much, and I can't tell you, how fast things are going to come off, but I can tell you the needle will move. I know how to make every person's credit score do this. Every single person. Guaranteed. No questions asked. It's just a matter of, will you take the advice or not?
How does credit utilization impact
That's
credit
a
score?
really good question. And it's probably one of the hardest things for me to get people to understand because people have credit cards and they're living off of them. And they're also fueling this addictive need to buy and to be a consumer. And unfortunately, as we're seeing with the country right now, right, we're in this $1 trillion debt, with our credit cards. Interest rates are higher than they've ever been. And 30% of our entire credit score comes from how we manage our credit cards. 30%, 1/3. Literally 1/3. And so if you have high utilization, and we see this all the time, we'll be fixing people's credit, removing negatives, and their scores won't budge. And they're like, oh my gosh, what is going on? Why isn't my score moving? And it was one of my favorite scenarios. I don't often get a chance to work with clients because my team does that. But there was a broker in our program, and we completely fixed her credit, which was we removed all the negatives. So she's like, why is my score a 590 still? I'm like, because all your credit cards are maxed out. I'm like, you have to pay them down. They have to be at 6% utilization or less on each card, and then your scores will go through the roof. So she's like, okay, I have a ton of closings coming up. I'm going to pay off all my credit cards, and then let's just see what happens. 802. 590 to 802. She's like, oh my God.
Cool.
She's like, you weren't kidding. And I was like, no, it's a real, and people don't believe it until they see it because they're like, how is it possible that these dinky little credit cards are carrying this much weight? And I teach it to people all the time when I'm showing them my pie charts. I'm like, right here on your credit, over here, 10% of your credit score, you've got your mortgages, you've got your car loans, your installment loans. And then over here, 30% of your credit score is your credit cards. How you manage your $500 credit card is more impactful than your $500,000 mortgage. People are always mystified by that. I'm still mystified by it, quite frankly.
Apart from credit utilization, should folks, apart from paying down their credit cards, should they close them out? That's kind of one of those, I don't want to say myths because I don't know if it's true or not, but it's like, don't close out things, just pay them down. But then at the same time, you have tons of available credit out there.
Sure.
What's your advice?
Keep them open.
Keep them all
Keep
open.
them open
Okay.
because the longer your history, the better your score. And credit cards are the only type of trade line that when you pay it off, it doesn't close. Versus, so when you pay off things like installment loans, like mortgages, car loans, right, it closes and it stops calculating into the score. And so it actually brings the scores backwards when you pay off installment loans. So keeping those credit cards open is imperative for good credit scores. You can have an 800 credit score with just having credit cards.
Okay. Does available credit affect?
Not in a negative way, only in a positive way.
Okay.
So the more you have available, right, the better. And so the less you have available, the worse your score will be. So there's no downside to having more available open credit.
What healthy credit habits would you recommend or share with the audience?
Absolutely. So I think one of the most important things, so one, I would tell everyone, put everything on auto pay. This is one of the best things that I think everybody should do because I believe that an ounce of prevention is worth more than a pound of cure. And one of the biggest things we see people do is they miss payments. And especially when they're in the mortgage process, they'll be a month away, 2 months away from closing. And they've got so much going on that they forget to pay the credit card that had maybe the annual fee. And all of a sudden their score comes tumbling down 125 points. Like, oh my gosh.
Those 30-day lates,
kills you.
60-day lates,
Crushes
they
you.
kill you.
Yeah. So auto pay is by far one of my number one go-tos. And the other thing I would tell everyone is get a budget. Start creating a budget. And because your budget is going to help you with your credit. And start practicing responsible spending habits and understanding, what credit cards are used for. And on top of that, if you have negatives on your credit report, then get them fixed. Get them fixed because everything is fixable. Truly everything is fixable. And so it's just a matter of putting the time in, putting the energy in, putting the effort in. And then once it's fixed, protect it with everything that you have. And that's why, again, I look at it every single day just to make sure what I have built over the years is protected. It's very important to me, obviously. And because it's going to impact literally every facet of your life. I would say those are 3 really, really healthy things to do in regards to your credit, 3 healthy tips.
And I know you mentioned a few of the credit monitoring services. How do they compare to a credit repair specialist like yourself?
Absolutely. So we have all of our clients enroll into credit monitoring, and we have a specific credit report that we use when we're trying to repair your credit. And so our company uses a company called getfitcredit.com. And the reason we utilize them, and there's a lot of services that you can use in credit repair, but the reason we use the reports we do is that we get to see all of TransUnion, all of Equifax, all of Experian side by side by side. We have to see that in order to be able to repair the credit effectively, because one of the biggest things we're looking at is all the differences between all 3 bureaus. That's one of the many laws that they always break is there's a lot of variation between all 3 bureaus on a multitude of things. And that's a lot of times how we're able to get things removed. So we use these tri-merge reports. They go back a full 10 years versus, Credit Karma, they're monitoring 2, or Experian, the free version, is monitoring 1. How the information is laid out is certainly going to be different. But for us, we use these reports that really make it simple for us to be able to tell you, here's where you're at, here's what needs to be done, and here's what we can work on effectively.
Now, obviously, a professional like you provides a valuable service to
Mhm.
folks,
Sure.
but we all know there's unscrupulous people out there. Just there's unscrupulous mortgage loan officers, and there's just always somebody out there looking to take advantage of
Mhm.
other people.
Yeah.
Um, are there any credit repair scams that folks should be aware of, or what are some of the red flags out there? Help the audience.
Did you want my blood to boil today?
Well, I see it. I see it
Yes.
on my side. All right,
Oh
and
my
I'm like, oh
gosh.
my god, some people are just.
It drives me up the wall. So one of the big things that I'm seeing, so some of these guys and gals go viral because they're like, we can eliminate your debt.
Mhm.
That's right. We can get rid of your student loans. We can do a credit sweep and we're going to remove everything from your credit report.
Yeah.
Making these claims and these promises that don't exist. Like, for instance, student loans. If you have student loans that you owe and it's to the federal government, I'm telling
Those
you,
never go away. You
they
could
never
claim
go away.
bankruptcy. You
Yes.
could do whatever
Yes.
it is. The government will always get their money.
Yes.
Yeah.
So it's stuff like that. So when something sounds too good to be true,
hmm
it is. And also, the one thing that we see too is a lot of companies, they will say, pay us this exorbitant amount of money. We'll fix you in 90 days. They've never even looked at your credit report. First of all, you can't claim to be able to fix something within a certain amount of time. It's a violation of what's called CROA. You can't do that. You have no control over the bureaus or the creditors, and you have to be doing these investigations on a client's behalf. And the creditor and the bureaus, they have a legal right to respond. And if they say this is supposed to be on the credit report and here's why, right? So people are just giving false promises to people to get them into their program and promising timeframes and promising this and promising that, charging exorbitant fees. And that's the other thing to be, just very aware of is like, if it's this insane number, you kind of want to wonder why, or like contracts. Like, we don't do contracts because we know our service, like, you might get fixed in a month. My speculation is maybe you're going to get fixed in 7 or 8 months, but I've had clients where I thought it was going to take us a really long time and they get fixed in a month. Why would I lock someone into a contract?
Yeah.
Why? Just to make more money off of them? Why?
So that's a red flag right there, right?
Yeah.
Contracts,
Yeah.
people, credit repair specialists that are promising the moon.
Yep.
Um,
Time frame.
Giving time frames. Okay. Things that the audience should look out for. Cool.
Big time. Big time.
Good. How do you keep people motivated as they go through that process? Because like you said, it could take 7 months, 8 months. In the meantime, they're discouraged and they're like, maybe I should just declare bankruptcy and wipe the slate clean and start all over. And, which of course we all know takes longer. But, and it doesn't wipe out all your debts. But
well, I mean, so I think so we have a lot of really good processes in place for when people are going through our program. And one of the biggest things that we try to remind our clients, so our firm is very unique. I came from a firm that was very big and they did a lot of things right. But one of the things that they didn't do is they didn't follow up with clients. And so we have inside of our program, we built in every single client gets a follow-up at the 30-day mark to let them know how they're progressing in the program, remind them of their goals, remind them of the things that they should be doing. And so I think hand-holding people and continuing to remind them of why they came to us in the first place is very helpful. Of course, there's still going to be like the 5 to 10% of people that just give up because they just give up, right? Sometimes people just can't get out of their own way.
Yeah.
And so, but the motivation part really comes from, we want to remind them why they started this journey in the first place. And so for us, when they're coming to us as a client, we're doing the digging, asking, okay, well, what are your goals? Like where do you see yourself going in the next year? What is the purpose of you fixing this credit? What does it mean to you to fix your credit? And one thing I ask people, I'm like, okay, so if you fix your credit, what does your life look like? What opportunities do you have now available to you? If you don't fix your credit, what does your life look like? And what is your life going to look like in the next year? Where are you going to be? Where are you going to be spending your time? Where is your money going to be allocated? And so this is a very real picture that we continuously paint for people. Like, what if you do and what if you don't? Like, what does that look like? And I think that helps the motivation behind what they will continue or not continue to do.
Excellent. And finally, what's one last piece of advice you would share with the audience and you wished everyone knew about credit?
So this is probably my favorite thing, and this is what my entire company is built on, is that credit is the cornerstone to building any sort of real wealth.
Yes.
And so we tell people it's something, so we believe that wealth is something that's very hard to emulate, because wealth is something that is really just tucked away. It's the money that's not being spent. It's the money that's being tucked away, put into savings account, putting into investment accounts. And to give you just a quick overview, people are on average spending $1,400 a month on interest right now. And if we can help you save just 500 of that, and if you were to invest that $500 a month into an S&P 500 at an average rate of return over like 30 years, you'd have over $1 million in investments versus spending it in interest. And so we want people to understand, like, if you want to build real wealth, it starts with having a good credit score.
Yeah, definitely. I mean, folks, listen, if the better your credit, the less it's going to cost you, right? You know, you see the commercials out there, 0% financing for a car. You know, if you have great credit, you're going to pay 0%.
Yeah.
Other folks, I see some of their car loan rates, and they're like credit card rates. They're, you know,
I did that.
Yeah.
That was me. Yeah. Horrible.
Yeah. I see people like 12, 13%. Oh my God. That's
horrible.
Crazy.
Yeah. You're paying an additional $400 to $500 a month for a car.
Yeah. Cool. And lastly, how can the audience get in touch with you?
Absolutely. So you can find us on Instagram at Fit Credit Doctor or Micah Abigail LLC. Also, if you want to go to our website, it's just www.micaabigail.com. And if you want to become a partner of ours, there's a link for that. If you want a consultation, there's a link for that.
Cool.
I'm also on Facebook.
And you have a podcast.
And I have a podcast.
So talk a little bit about your podcast.
Absolutely. So my podcast is Rebuild and Rise, and it's newer, and it really is all-encompassing in regards to, we talk about finances, we talk about people who have struggled with finances, but we have practical and real-life solutions. And I think one of the biggest things, people need to know that they're not alone. And that's what we want people to understand. Like, we all go through struggles, we all go through hardships, but there is a light at the end of the tunnel. So that's what Rebuild and Rise is all about.
Cool. I love the name.
Thank you.
I love the name. It's great. And thank you very much for appearing on the Real Est Show, you know.
Yes. Thank you for having me.
And I mean, I've always say, like, the show is about pulling back the curtains on the real estate industry, giving the audience an inside look. And I think you really shared a wealth of knowledge, and I appreciate you for appearing.
Thanks for having me. It's so
hopefully
good to see
we'll talk soon.
Of course we will. Probably tomorrow. I'll call you tomorrow. I'll call you in 5 minutes.
All right, cool. Have a great day, everyone. Take care.
Thanks.
Once again, this be the realest shit you heard in your life.